Hi everybody, we're actually having a mini heat wave here in Canada.
We are, unseasonably so.
We're having a great day.
So, what are we going to talk about today, Teen? How about the best guide to dividend investing?
Sounds good.
So we're going to show you 5 top tips to help you save and get passive income from dividend stocks.
And if you are new to our channel, please subscribe because we really appreciate it, and it does help our channel, doesn't it?
And it greatly encourages us to know that people are enjoying what we do.
And that way you won't miss out on any future videos that we put up.
So let's get straight into it. Why invest in dividend stocks? That's a biggie.
Because interest rates are at an all-time low.
They really are. And if we look at what our parents were getting when they were in retirement, they were able to get nearly 10% back on their cash deposits at the local bank. Those days are long gone.
Yeah,
So,
we wish.
In today's market, you can only get, on a regular savings account at a big bank in Canada, 0.5% in interest. Mm-hmm. If you go to the new internet-based banks that some insurance companies are running, or credit unions, the maximum is 1.5.
Yeah, which is actually...
And that's not enough to live on.
No, it isn't, is it? But overall, Norm, the stock market is healthy, isn't it?
That's one of the reasons to invest in dividend stocks at the moment. The stock markets have been on a tear for quite a few years. Mm-hmm. Okay, COVID-19, they sold off, but the good quality stocks, the ones that we're suggesting that you buy, they've come back relatively close to their previous valuations before March of this year.
Which is great because, as you know, like a lot of people, Norm, think that the stock market is risky, don't they?
That's a popular conception, really. I think our parents' generation felt that, and our parents didn't invest in the stock market.
No, they didn't, did they?
But it's not. It's not as risky as you think it is. Everything about life is a risk at some point, but
that's true.
But the stock market, you can reduce the risks by making smart decisions, and that's what we're really trying to help you with today. So, if you had a whole pile of cash, or you wanted to start saving to have some cash, where would you put your money normally? What would be the popular?
You'd take your money down and put it in the bank.
You would indeed.
Yeah. In like a savings account or something.
So you'd be getting 0.5%, as we said earlier on, yeah, but there is one little catch to a bank account. They're not free, are they?
No, they're not. They actually charge you, don't they?
And they even charge old people like us, who are seniors on fixed incomes. And
even with senior rates, we still have to pay, don't we, Norm?
We do. So what would be an average fee in Canada for bank rates, do you think?
I think a lot of them are around about $20 a month. I think our reduced one is like 12, but I think the majority of them are around 20.
So if we use 20 just because it's a more simple way of doing math, how much money in capital would you need to invest in that bank to just earn enough interest to pay that monthly bank fee?
You would need $50,000.
Holy moly.
Just to cover the service fees of what you charged in a year.
So you're going to take some of the capital that you want to live on in retirement and just put $50,000 aside that you're never going to use just to pay the bank fees.
Just to pay the fees, which is crazy, isn't it?
So, now that we've said why invest, what to invest in?
Ooh, like this. We like to buy safe stocks. And
by safe, what we mean is high quality companies that are managed well.
Yes, and in our case, we like the banks, don't we?
We do. So you knew we were going to come back to the banks, didn't you?
Yes, we like banks because remember, if you put your money in, you didn't get very much. But if you buy the banks, you get a lot higher interest on your dividends, don't you?
And the other thing about it is if you trust the banks so much to give them your capital, to put it into a high interest savings account, then why wouldn't you buy the bank stocks if you had that much faith in the bank?
Yeah, that's very true, isn't it?
But you're going to get 5% or
which is a
5.5%.
lot better, yeah. And one thing we should say is we like the banks that you should avoid the high interest dividends, sort of over the 6%. You can get tempted, can't you, Norm, to go for these high ones.
And we have done that.
Yes, we have been burnt on a couple, haven't we?
And the problem, Tina, with a lot of the high percent dividend is when the stock market goes down, there's a great temptation for those companies to suspend dividends or cut dividends.
Yeah, which isn't good, is
And
it?
the first thing that happens when a company either cuts a dividend, either reducing it or cutting it out altogether, is the stock price absolutely tanks.
So you lose on both ways. The stock price goes down and you lose on the dividends too.
You do.
So our
don't get
advice,
greedy.
No, don't get greedy. Stick with the stable banks with a good rate.
So we do like the banks because they're all paying around 5%.
Yeah,
Some are paying 5.5%, which is enough to live on.
That's very true.
Don't go greedy and go after those 18% dividends because they won't last.
No, it'd be very short-lived, wouldn't it?
So where do you find the winners to invest in, Teen?
Well, there are the dividends. You can go to the aristocrat list.
So we've talked about that before. The US and Canada both have lists of aristocrat stocks. They basically are the ones who have increased their dividends over a consistent period of time. But that's not the only list to go for. So we'll come back to the banks because we're using that as an example. So we've invested in the stock of the Bank of Montreal.
Yes.
And they've been paying a dividend since the early 1800s. So that kind of
gives us a good feeling that they're pretty rock solid, aren't they?
And all the Canadian banks have been paying dividends since the 1800s. The Bank of Montreal was the first one, and the Royal Bank was the last one to come in with dividend payments in the late 1800s. So you're on a winner with those.
Yeah, pretty solid, eh?
And there are lists, just search for them, but stick with the quality, well-managed companies. They're household names. We avoid a lot of the energy companies because of the volatility of oil prices and what have you. So aristocrat lists
that's very
to find
helpful,
potential stocks to invest in.
So one thing, Norm, is I'm sure people are wondering is who should invest? Who are the people that should be buying the dividend stocks?
Well, you could blanketly say everybody.
Yeah.
But it's good for retirees for one reason, because we need income.
Like us.
So we have it and it produces around 5% monthly for us. But for those who are striving for early retirement like we did in our 50s, those in their 40s and 50s, it's an ideal vehicle to invest in. Dividend stocks are slightly more stable than growth stocks. So at the moment, COVID-19 depressed the stock market, prices came down, not as much as you would initially think. But when you're getting paid a dividend, they're paying you to wait for the stock price to come back.
This is true.
You don't want to sell the dividend stock because it's coming up with my favorite story. It's chopping the tree down instead of eating the apples. So it doesn't matter that your dividend stock has lost 10 or 15% of its value because they're still paying you your dividend.
Which is great. So you win all round, don't you?
You do.
Yeah,
and
this is
those
true.
in the 40 to 50-year-old age group, or even younger, the more entrepreneurial young people, should maybe look at dividend stocks that maybe offer a DRIP, a Dividend Reinvestment Program, where instead of them paying you the dividend in cash, they pay you in stock so
Which
you're
is-
building
yeah.
your stock holding.
Which is another great idea, isn't it, to get more stocks?
It really is. So
Yeah.
if you're looking to build that capital, dividend reinvestment plan is another useful way, because you don't need the income because you're probably already employed and have enough. So, number 5, outliving your money.
And you know what? That is something that a lot of people worry about, isn't it?
Well, we did.
We did.
We were terrified
Yeah.
that we might, in retirement, run out of money. So we actually got a calculator out and
Worked out how much we would need if we lived till we were sort of like 75 or 80, calculated it all, didn't we?
we even
To see if we had
calculated
enough.
to 90 for Tina,
Yeah.
because she's going to outlive me.
Not necessarily, Norm, but that is something that people are worried about. Are we going to run out of money? Are we going to outlive it? And really, you're not, are you?
So when you combine the government pensions that you're going to get, and we're looking
Yeah.
at around 20,000 in government money
Yeah,
that we get per year, just spend the dividends. You don't need
Yeah.
to dip into that capital unless there's something that you particularly really want.
Yeah.
But with the 20,000, with the 5% dividends, we don't even spend all the dividends because we don't need to. So that's staying as investment capital.
So it is surprising, isn't it? Just as you get older, you don't need as much as well.
You don't. And this whole thing about living frugally becomes a natural lifestyle.
It does, doesn't it? Always watching to save the pennies.
That's
but
right.
the big chunk of the money is still there, and we're just, as Norm says, we're eating the apples off our trees.
Yeah, not chopping the trees down.
Which-
And there is a theory that if you don't withdraw more than 4% of your portfolio per year, you won't outlive. Your money will outlive you. You won't run out of money in retirement.
So if you are concerned about having a legacy and leaving it behind for your family, that will take care of that, won't it?
It is,
Yeah.
and so this comes back to the whole point of this. Maybe you've sold your house and you want to invest it. You want to pay for your retirement. Maybe you don't have a pension. Then you should basically think about dividend stocks, getting 5%, and you should have enough to live on.
Which is great, isn't it?
It is. So,
We hope that you've enjoyed our video.
we do.
Yeah. And we hope that everybody is staying safe.
Staying well, avoiding this virus.
Yeah. And just enjoying life.